Hey everyone! Welcome back to the channel. Today, we are diving into a hot topic that's shaking up the European economy and, in turn, rippling across the globe. The European Central Bank's, ECB, recent decision to cut interest rates for the 8th time in just over a year. That's right. We're talking about a move from 2.25% down to 2%. Now, why does this matter? Let's break it down. First off, let's set the stage. The eurozone is feeling the heat from Donald Trump's tariffs like a sauna in July. The aggressive tariff policies on steel and aluminum have put significant pressure on European businesses and exports. So, when we hear that the ECB is taking action, it's not just numbers on a spreadsheet. It's a direct response to economic uncertainty that could stifle growth. Now, the ECB has voiced concerns about trade uncertainty, weighing heavily on business investments and exports. What does that mean for you and me? Well, businesses are less likely to invest in new projects or expand operations if they don't know what their costs will look like tomorrow, especially with potential retaliatory tariffs looming over them like a dark cloud. But here's where it gets interesting. The ECB reports that despite these challenges, there was stronger than expected growth of 0.3% between January and March. However, they caution us not to get too comfortable. As the year progresses, that momentum may dwindle unless something shifts positively in the trade landscape. And think of it like a race car. If you hit a wall of uncertainty, your speed drops. Now let's talk about inflation. It has eased across Europe but is still hovering around 1.9%, just under that coveted 2% target set by the ECB. Christine Lagarde, the ECB president, pointed out that higher incomes and a robust employment market could empower households to spend more. This spending can help bolster an economy that needs resilience against global shocks, like those pesky tariffs. And there's more. The medium-term outlook is optimistic, largely thanks to increased defense and infrastructure spending driven by NATO's call for higher military budgets in Europe amid Russia's ongoing war on Ukraine. If governments pour money into these sectors, it could create jobs and stimulate economic activity. But hold on. While Lagarde is painting a picture of hope, she also admits there's still a lot of uncertainty due to trade policies. And let's not forget Germany's Chancellor Friedrich Merz meeting with Trump soon. It could either be a game changer or throw us back into chaos. Switching gears for a moment, how is this all playing out across the pond? Well, while Europe cuts interest rates aggressively, here in the US, we see a more cautious approach from our Federal Reserve under Jerome Powell. Trump himself has been vocal about his discontent with the Fed's pace of rate cuts compared to Europe. He even tweeted about it recently, talk about putting pressure on Powell. We're seeing mixed signals coming from US economic indicators as well. Hiring by American firms has hit its lowest level in over 2 years, yikes! And forecasts suggest job growth could slow down even further. It raises an eyebrow when you consider how interlinked these economies are. What happens in Europe inevitably influences us here. Let's bring it all home. As interest rates drop in Europe and tensions rise due to tariffs, we need to keep our eyes peeled for what this means for global markets and our own economy here in the US. Will European consumers step up their spending? Will businesses invest despite uncertainty? And what will happen when Merz meets Trump? In conclusion, folks, we're at a pivotal moment where economic decisions are being made not only in boardrooms, but also through political maneuvers across continents. Keep your eyes on these developments because they could reshape our economic future in ways we can't yet imagine. Thanks for tuning in. If you enjoyed this analysis or want to dive deeper into any of these topics, hit that subscribe button and let me know your thoughts in the comments below. Let's keep this conversation going.